Okay, so just continuing with the scenario that we painted just before we got rudely abrupted yesterday. So we're basically just trying to strike a point home in saying that registering as a VAT vendor can be a characteristic which is unique to any different situation. So that situation could be given rise by the type of institution that wants to register as a company. A trust can register as a company, a closed corporation can register as a company, a sole proprietor can register as a company, and so can a partnership as well. So we're basically just trying to use an example of a partnership of 3 partners. They all have different membership interests, and we focused on one partner who has like a 20% interest within the actual partnership. For argument's sake, let's just say the other 2 have 40% interest. But our focus for elaborating the actual example in this instance is that the 20% member who has like a 20% interest in the partnership now assumes that since he's got 20% interest in the partnership, and in the same breath, the partnership is in the process of registering as a VAT vendor because they've satisfied all the requirements as per SARS standards to register as a VAT vendor. So his assumption is now goes to state that because he has a 20% interest in the partnership, so far as the registration of the partnership being a registered VAT vendor, it also only be liable for 20% of being a VAT vendor, and the other 2 who have a 40% interest, they would also be liable for their 40% interest as per membership interest within the memorandum of incorporation. So that's basically a big no-no. Such a scenario is not applicable when a partnership registers as a VAT vendor. What happens when a partnership registers as a VAT vendor, irrespective of how many members the partnership actually has within its membership interest, that's irrelevant. The partnership will register as a VAT vendor as one person, so that is basically the main understanding that you should be applying when registering as a VAT vendor. So you will be registering as one company, so you'd be seen to be one person, the partnership and the members in that regard. So that's how you basically would have just how to actually go on to likely understand the position of a partnership when registering as a VAT vendor. And the same is applicable to any sort of an institution, be it a trust, be it a company, and obviously sole proprietor, it's one person in any case, and it will be such assumptions, or it will basically share the same conclusion so far as the application of registering as a VAT vendor is concerned. So that is the process of what you'd likely get in terms of registering as a VAT vendor. So now, let's say we have a person, we've moved over now to a different situation as opposed to registering. Now we're in a situation where we've got a person who's trying to avoid registering for VAT because they know that in terms of you registering for VAT, should you have a turnover of more than R1 million, as per SARS requirements, you'd be compelled to register because that would be a compulsory registration that is expected from a particular person who's a VAT vendor or who's not a VAT vendor at the time, but now, since they've exceeded the turnover threshold, which is a compulsory threshold value for anyone transacting within the Republic to actually be a registered VAT vendor. So now you get one person, let's say this person is a He's an accountant who's quite wealthy. He's done well for himself. So he has like a few close corporations that he's opened up that are offering accounting services in different locations. So let's say he's got an accounting CC, which is A in Midland, and it generates an income of 500,000. He's got another one, we call it B, which is also a CC, offers accounting services as well. And this one is based, let's say, in Hammersmith. Generates an income of, let's call it, 300,000. And he's got another CC, which is different from his accounting services. Let's call it, he's got the CC, which is an electrical company, electrical CC. It generates an income of 400,000. And CCD also happens to be an accounting company, and it generates an income of, let's say, 400. So now this guy, because he's very much aware that when you are generating an income of more than R1,000,000, you are compelled to register as a vendor so that you can start charging VAT and you can start transacting as a VAT vendor. But he's avoiding that whole process. He does not want to be a VAT vendor, and he's basically avoiding that. So looking at this scenario, when we look at company A, CCA, CCB, and CCD, which happen to be accounting CCs, these are basically the same companies that are offering the same service, and they may be based in different locations, but however, there are companies which are offering the same service by the same person. That basically means that they belong to one person. And in this instance, if we have similar companies offering the same service and they are aggregated, turnover is more than R1,000,000, you're compelled to register as a VAT vendor. So in this instance, CCA will have to be aggregated in terms of its income, which is 500,000, with CCB with its income of 300,000 plus CCD with its income of 400,000. So in aggregate, if we add 500 plus 300 plus 400, we get 1.2 million rands, which is in excess of the 1 million rands threshold for tax to be a VAT vendor. Therefore, this gentleman will have to register as a VAT vendor. This is the anti-avoidance that SARS has put in place for such people trying to avoid having to be registered vendors. So this is an anti-avoidance, and SARS says similar businesses that are offering the same services within the same ownership of ownership interest. In that particular instance, they have to be registered for VAT vendors if their total income in aggregation as per the turnover exceeds R1,000,000, which is a compulsory registration as far as VAT. Then that company has to register as a VAT vendor, and they must register as one corporation so that they can start paying VAT, and they can also start claiming VAT where such transactions are obviously due to them. So this is basically an anti-avoidance. Whereas with CCC, it's a different company which has an income of 400,000, and it's an electrical company. So this CC does not have to be aggregated to this income. It's a separate company so far as we're concerned. And looking at the 400,000, they don't have to register as a VAT vendor because they are not in excess of the 1,000,000 rands threshold, which is a requirement for you to be registered. However, since it's 400,000 turnover that they're basically generating, which is in excess of the 50,000 voluntary registration, if you so wish, they can still register if they wanted to. But since this gentleman is trying this whole running away process from not registering, he will likely not take the voluntary registration of the 50,000 rands threshold option that he has. So that's basically what we have to be very mindful of, and that covers that part. So now, when will VAT be accounted for? When we basically are here, we're basically talking about the timing of the actual supply. When will VAT be accounted for? So we know that VAT is either accounted for at the earlier of receipts of payment or invoice. Put differently, VAT is accounted at the earlier of invoice or receipt of payment. Right. So this answers the question of timing of VAT, basically, which we kind of like touched on in our prior lessons. And as to the value of supply, the value of supply basically answers the question of what amount, the amount in rand terms, basically, the amount in rand terms. In rand terms. So if we're to sum it up quick in terms of rand terms, it will be measured, or it will rather be measured if the amount being transacted is between a vendor who supplies a good or a service and he gets paid in cash, then the cash amount will equal to the consideration, which will equal to the value of money will be the actual value of supply. So in simple terms, if somebody is transacting with someone, just as we used in the bag of oranges, and that bag of oranges is basically paid up by the next person in a cash form, where the person pays 10 rands for the 20 rands for the bag of oranges, and he gets oranges in return. So the actual consideration, the value of money in that instance, will be measured by the 20 rands that he basically would have received from having sold the bag of oranges. Whereas if the bag of oranges was basically transacted with the bookkeeping service, which would have been a service of 50 rands, and the bag of oranges is 50 rands as well in this instance. So this 50 rand amount, as far as the bookkeeping service, will likely be the market value of bookkeeping services within the market. So in this instance, since it's getting paid in a form of services, which is not money but rather a service or an asset of some sort, then the market value of that transaction will be deemed to be the actual consideration, which is basically the value of that supply. And that's basically what we mean. Or even if it was not paid in bookkeeping services, but it was paid with another asset, for instance. Let's say it was paid with another bag of potatoes. That bag of potatoes, let's say the market value of bag of potatoes in the market would have been 50 rands, then the measure or the value of the actual supply would have also been measured by the market value of the bag of potatoes, which is 50 rands, and that's basically what we're trying to elaborate there. So now, with timing of supply, as we also just elaborated and touched on it, it's basically, you have to look at the earlier principle that takes precedence. Does it get paid? Does that get recognized at the when an invoice is issued, or when an invoice is issued, or when payment takes precedence, basically. So it's either one of the two. So if invoice was recognized on the 25th of Feb and payment took place on the 28th of Feb 2024, then the earlier of the two dates would have been the 25th of Feb 2024. So that would have been recognized at this date. So the earlier of invoicing or earlier of payment. So whichever one situation arises before the other, that's when we'd recognize that, and that's when you'd likely be recognizing as to whether VAT will be claimed and as to whether VAT will also be payable. And these are the situations that you'd likely be faced with when you are basically answering the question of timing of supply, which is the whole principle of earlier of receipt and payment having to be brought into that discussion. And for exam purposes, as we've elaborated before, we must just mention the two dates. And you can also go on and say that this will be included within the February 2024 VAT cycle. Therefore, payment of such an invoice must be done on the 25th month of the following month. In that case, it would have been March, and so forth and so forth. We spoke about those principles. So value of supply, you must just keep in mind that it basically talks about the value amount of how we'll basically measure that transaction. If that transaction was basically exchanged for cash, then the cash amount will be the value of the actual transaction. If that value or that actual transaction basically took had an exchange of a service or a good being exchanged, as in like a